Okay, we're going to be doing a review on March 31st, 2025, a play called for a buy limit, and we're going to start from scratch. So I do have everything pre-marked up already, just so I can save time on this video. According to Jordan's strategy, we do mark up the lows and highs of days on the 5 minute, all within session. So since this day was Monday, we were looking at Friday. We marked up the low of day and the high of day being up here. Not this one because this one is out of session. And then our previous high of day being Thursday, 2 previous trading days. We've got previous high of day marked up here and previous low of day marked here. Now we're going to go into the weekly. And the weekly top-down analysis, I've left everything marked up just so we can save time on this video. But I'm going to talk about each point and where I chose to put these lines. So ultimately, when you're doing the top-down analysis, you want to be able to paint a picture for yourself. You want to see where price is going, where has price been, and where could price go next. So on the weekly, we do have this red contrary candle that was left behind before this big push. So this red candle, you mark up before a big bluish push, and then the blue ones you would mark up if it's a red downward push. So if it's bearish, you mark up the bullish candle before the big push, and then if it's bullish, you mark up the bearish candle before the big push. So I have this weekly marked up. You can see price tapped it literally to the pip, and it's giving a reaction off of that area. And then these areas that are left behind are not random. We can see that from this supply up here, price literally tapped it to the pip as well and gave a reaction from there. So price is currently finding supply and demand, and then demand to supply. So this here that was left behind ended up being used here, leaving another weekly supply zone. So this would be our supply, and then this down here would be our demand zone. So I mark it up with just a line because it makes it a lot cleaner, but ultimately it's the entire area that would be considered the demand or supply zone. And then now we'll go down to the daily. So I wouldn't normally mark this one up because it's already been touched by this candle here. So technically the next area for price that could go to on the weekly would be this one up here, this previous contrary candle before the big push. Now we'll go down to the daily, and then we'll mark up the daily. The daily would have been down here. This candle is a bearish candle, the last contrary candle before this big push. I wouldn't mark up this one because it's touched by this one. So this red candle has this red candle inside of it. It has to be a candle that's not touched before a big push. So this candle here, it shifted structure and left behind this little tiny bearish candle being our daily demand zone. But currently we're working with price reacting off of this weekly, thus looking for supply on a higher time frame to bring us back down to possibly the daily. Or should price break past these areas, it would continue up to the weekly to then sell from there. So we'll see on the daily. On the daily, we have no current daily demand zone here. We have just this one that was left behind here. And they're not just random areas. So this supply candle that was left here ends up being used by this one here and leaves behind this one. So it has not been touched yet. This would be a candle that has not been touched yet by usually another candle of its same color. So as how this one looks like it may have come back and touched it, that wouldn't count because that's just volume coming out of this area. So automatically I can see that from the daily, there is technically no demand that can be used here, that can be pinpointed out. So it looks like price is just looking to find supply to then find demand. Can't quite mark up this one yet because price is currently in this area. This one has already been touched by here. So at the very least, we do know that price is pushing up to find supply. So now we're starting to paint the picture. We had price come down, tap the weekly, give a push, left behind this demand zone here, ends up coming back and using it and pushing up. So I'm already thinking buys both on the weekly and the daily. And then now we'll go down to the 4 hour. I'm gonna turn off the session based indicators and we'll see what we got. Okay, so on the 4 hour, I have this one marked up here. Seeing as how technically it has not been used yet, it's fairly close. This previous blue one that was used is fairly close, but it didn't quite touch it, so I won't count it as being used yet. And that'll be the H4 possible supply zone area that it can reach to. And as far as demand areas for the H4, I don't quite see one, seeing as how they're all kind of used. This one is used by this one. This one's used by this one. But you can see as how price comes back to these previous contrary candles, normally gives a reaction and then leaves behind another supply and another supply or demand. And this one is used by these. This one used by this one. So we can't really count those. The next H4 would be way down here. This H4 down here. So back to current price. Now that you've got your H4 marked up, and the only one we could mark up was this one up here, that could be the next possible target. You can mark up ones that are higher. If price were to break past this area, you need to know where price could go to next. So this H4 and daily would be the next supply area. And then we'll go down to the 1 hour and we'll see what we got. So just automatically looking to the left, we are still already considering buys. So I'm looking for areas where price may have used as demand before. And if you look closely, we've got this area that was used as demand, leaving behind this contrary candle that gave this giant push, also left this candle as demand. So now this is what we're working with. We're working with buys coming back into demand, finding supply, and then now coming back into demand. And seeing as how we have no H4 and no positive H1 in here, that could be considered a valid supply zone. We could mark up just this one that was up here, because it was one that ended up being used by another supply. So this supply created this big push, thus validating this candle as a valid H1 supply zone. So we're keeping all of this in mind. We need this in mind just to know where price could go next and have a reaction. So I don't see any current H1 demand zones here. You can look to the left, but we already established that price is inside of this contrary candle. I normally mark it up with lines such as these, just so I know where the target is and I don't have a bunch of boxes everywhere like this. But just for the sake of the video and explaining, the entire demand zone is the entire candle. It's okay if you put the lines, there's nothing wrong with that, but the entire candle is where the demand zone is. Seeing as price never broke under the demand zone, it is a valid demand zone. And we're already looking for buys at this point. So when I come to sit down at 8 in the morning, I'm gonna turn on the session-based indicators. This is what I'm presented with. I'm still looking for buys, and I'm looking for areas where price could go up to on the higher time frame as a possible area to come out on my take profit, or just an area where I could expect price to get to then create a reaction. If you would like to mark up areas that haven't been touched, technically this candle has yet to have been touched. There's nothing wrong with that. It may not just be considered a valid supply yet because it hasn't given a reaction, such as this one. This one was left behind and left behind this one with another big push. So this is just an area where price could give a reaction from, not necessarily saying that it will be a valid one. And then we'll move back down. Check on the M15, and you're doing the same thing pretty much on the lower time frames. You just start marking out these areas where price could come back into to continue the move. Price never came back into this M15. You can even do it on the M5. The M5 as well has this M5 down here. Nothing. All right, then I'll come back down to this one as well. Remember, I'm just marking the line, but technically it's the entire candlestick here. And then as price continues, what we're looking for is a shift of structure inside of these boxes. We're looking for a shift of structure either on the 5 minute or the 1 minute. It can be a micro shift of structure or a macro shift of structure, meaning a higher time frame shift of structure being on the 5 minute or 15 minute. And then we'll see as price continued. All right. So this here, this is where I decided that I was gonna get into my buys, because then there was this candle that was also left here. So it's constantly analyzing, reanalyzing, and looking for a possible entry. Because we are scalpers, we're going in the direction of the trend, just looking for an entry point. And then we'll see as price comes back to our M5. Waiting for price to give a shift of structure. Let me reset this so it looks a little cleaner. So for a shift of structure to happen, it has to break the previous high or low, correct? So I'm going to mark up this area as the previous high or low. You can do it on the 1 minute or the 5 minute. You just need it to break on either one. We'll see what price does. Price continues. It has not shifted structure. Boom. As soon as I see this, the shift of structure with all this volume, that's all the confirmation that I need to be able to place a buy order here. So I'll go ahead and look for an entry confirmation on the M1 time frame. So I've got this candle right here, which is my M1. There's an M1 confirmation buy limit. Seeing as how this one was used by this one already, this would be my entry point. And you'll see that these demand zones are not random, because there's an M1 demand left behind here inside of the M5 demand used by this one, and then this one was left behind from here, thus using this one. So this one is a valid M1 entry confirmation demand zone, and then that's where you decide to put your buy limit. And this one ends up activating around 11 or so. It was a little later on in the day, usually past my trading point. So I personally did not take this trade, but this is the trade strategy right here. And I'll do it on the 5 minute just so we can get a clearer view of it. Let it play out. Boom, activates our order. Gets close to drawdown, gets close to our stop loss. And we'll see that price ends up going for a 1 to 3. Beautifully. And our target for the day was the low of day. So the next area that you have marked up would technically be your target. So I could have targeted this low of day and exited there for a clean 1 to 4 almost. Yeah, I could have just left it at the low of day, and that would have been a 3.62. If you held it a little longer, it could have been a 1 to 4. That would have been a clean 4% right there. And then price, I believe, does continue to the upside. That's it. That's the entire trade right there. That's Jordan's trading strategy.